Today I do briefly explain what CASA is and why it is a challenge for Union Bank of India. So what exactly is CASA? CASA stands for Current Account and Saving Account Deposit. Current accounts are mainly used by businesses while saving account used by individuals. Since these accounts pay very low interest, they are cheap source of fund for bank. Union Bank of India actually recorded its highest ever profit in financial year 2024, which shows strong performance. However, despite this success, its CASA ratio fell to 33.58%, which is lower than the industry average about 40.5%. This decline increased the bank cost of fund and reduced its net interest margin, which can affect long-term stability. Some key reasons include higher interest rate, strong competition from private and small finance bank customer moving to mutual fund, digital banking challenges, and drop in current account deposit. So even the Union Bank is so profitable, improving its CASA ratio is very important sustainable growth. Thank you.
So today, I will compare about the performance of the public sector bank and private sector based on the profitability, asset quality, CASA contribution, and growth performance. So first, in terms of the profitability, private sector bank outperform public bank. They enjoy a higher net interest margin, higher profit per employee, and more efficient operating model. Although some public banks record a strong overall profit, their margin are squeezed due to the higher funding costs. Second is regarding the asset quality NPA. Private banks generally maintain much lower NPA ratio. Their risk assessment and credit collection process are tighter. Public banks, on the other hand, still carry the legacy NPA and must lend to the priority sector, which is the increases risk. Third is the CASA contribution. CASA contribution is which is the private bank attract more lower cost current and saving account, especially from the premium and the business client. Public bank have a larger overall deposit base, but their CASA ratio is lower compared to the private bank. This is leading to the higher cost of the fund. Fourth is the growth of performance. Private bank grow faster, driven to the strong retail lending and a rapid digital adoption. Public bank grow more slowly due to the structural constraint, but they remain strong in terms of branch network coverage and stable customer base. In the conclusion, we can conclude that private banks generally perform better because they are more efficient, more digital, and manage asset quality more effectively. However, public banks remain essential due to the large-scale wide network and significant contribution to the national financial inclusion. Thank you.
So in this video, I will explain question 2 and question 3. So the first in the interest rate environments play an important role in determining CASA levels. When the interest rate increase, customers tend to move their money from saving account to fixed deposit, which is offer a high return. So this causes the CASA ratio to decline. Next, customer choice also affect CASA. Public sector bank in India are government-owned, so they are generally trusted more, especially by rural customers. This helps public bank maintain stable CASA balances. So another key factor is digital banking's convenience. Private banks usually offer more advanced mobile banking app and online services. This attracts a younger and urban customer, which help increase CASA deposit. And lastly, branch distribution influence CASA collections. Public banks have a wider branch network in rural area, while private banks focus more on urban location. So this is a difference affect the type of volume of CASA deposits. So moving on to the question 3, which is the CASA ratio among top Indian banks show a slight downward trend in the recent year. This is mainly due to customer preference fixed deposit during a period of higher interest rate. Meanwhile, the credit deposit ratio or CDR show an increasing trend. This indicates that banks are extending more loans to support economic growth. However, banks ensure the CDR maintained at a safe level to avoid liquidity risk. A high CASA ratio helps banks lower their cost of funds because saving and current account pay a lower interest. This improves profitability and strengthens financial stability. On the other hand, a low CASA ratio means banks rely on a high cost deposit such as a fixed deposit. This increases a financial risk and can affect liquidity during uncertainty economic conditions. So in conclusions, CASA and CDR trend are influenced by interest rate, customer behavior, and a banking strategy. Maintaining a strong CASA ratio is important for ensuring a long-term bank stability. Thank you.
Right now, I will talk about three things. First one is performance of Union Bank of India. Second is comparison with other banks. And third is the decline in Union Bank. First, in terms of profitability, Union Bank has shown a strong turnaround. In 2024, the bank recorded its highest ever profit after losses in years post-merger. Its return on assets improved and profit per employee increased, showing better operational efficiency. However, its net interest margin remains under pressure due to rising funding costs. Second, looking at the CASA ratio trend, Union Bank CASA declined to around 33 to 34%, which is below the industry average of about 40%. This is a major concern because CASA deposits are low-cost funds, and a decline increases the bank cost of funds. Third, for the credit deposit ratio, Union Bank CDR has been increasing, reflecting strong credit growth. While this shows aggressive lending, it also creates liquidity pressure, especially when deposit growth does not keep pace. Next, I will talk about the comparison. When we compare Union Bank of India with other banks, we can see clear difference. Among public banks, SBI performs better because it has a higher CASA ratio and a strong digital system like the YONO app, which help keep customers. PNB also performs slightly better than Union Bank, especially in collecting deposits. Union Bank, however, lags behind SBI and PNB in CASA, which increased its cost of funds. Next, I will talk about the decline in Union Bank CASA can be explained by two main reasons. First, competitors are offering higher interest rates, especially private banks and small finance banks. Customers naturally shift their savings to banks with better returns. Two, limited digital penetration is challenged compared to private banks. Union Bank's app and digital service are less intuitive, causing digital-savvy customers to move away.
For the final part, I will discuss the recommended action plan for Union Banks of India to improve its CASA ratio. First, Union Bank should strengthen digital CASA acquisition by improving the VYOM apps and simplifying digital account opening to attract younger and salaried customers. Second, the bank should focus on increasing current account deposits, especially from MSME, by offering cash management services and using dedicated relationship managers under the Union Leap initiative. Third, Union Bank should redesign saving account by offering tiered benefits such as fee waivers and preferential loans rate instead of competing only on interest rates. Overall, this strategy can help Union Bank improve its CASA ratio and reduce its cost of funds. Thank you. In conclusion, CASA plays a crucial role in determining a bank cost of funds, profitability, and long-term stability. From our analysis, Union Bank of India has shown strong improvement in profitability and credit growth, especially after recording its higher ever profit in FY 2024. However, the declining CASA ratio remains a key challenge, mainly due to higher interest rates, strong competition, and limited digital appeal compared to private banks. Therefore, to remain competitive and financially stable, Union Bank must strengthen its digital capabilities, improve customer experience, and rebuild its low-cost CASA base. By doing so, Union Bank can achieve sustainable growth in the long run. That's from our group. Thank you.